How's it going, guys? Antoine here from WealthShare. In today's video, we're going to go through a question that I get all the time, which is, when should I sell my stock investments? I think it's helpful to answer that question to go through a little bit of context of where we're at today in 2021 in February. So in February of last year, in 2020, there was a massive plummet in the stock market that just absolutely tanked. And then in March, we saw a massive kind of rebound from that trough and a huge surge in the markets that's basically been here since. So we can see that kind of in these charts that I'll show you guys right here. And you know, the question is, when will the next collapse happen, and how can we all avoid losing big, right? We have to start thinking about kind of like a chess player, or just, you know, go ahead and watch Queen's Gambit. But in all seriousness, the savvy investor is thinking about what's the next thing, what's the upcoming trend, instead of reacting and following the herd. Following the herd often means you'll be, acting too late, or can actually lose big. And some of what we've seen with, some of the recent, surges with the GameStop play, AMC, Dogecoin, things of like that nature, which I think, will continue to be actual things we can consider to invest in. And by the way, as a disclosure, I've invested in all of those previously, or I'm currently holding some of those positions today. Alrighty, so let's jump into it. Two parts of this video again, right? First part, we're gonna talk about my portfolio in 2020 and some moves that I made that allowed me to get 181% returns and make $245,000 in 2020. I don't say this to brag. I don't say this because I want to inflate my ego or anything like that. I'm saying this because I want to build a little bit of credibility here. And I really, truly, in 2021, this year, my New Year's resolution is I want to help 1,000 people level up their investing. You might not believe the numbers I just told you, or might not believe that I actually, made that type of money in 2020. I wouldn't either. I'm just some random stranger on the internet, doing YouTube videos now. To build a little bit of credibility there, what I've done is actually pull a pretty crazy move, what some may say is a crazy move, which is I've opened up my full portfolio and shown all the transaction history on Robinhood that I'm updating every single month, which is, by the way, Robinhood is where I hold 99% of my non-retirement investments. So my retirement accounts are in a separate thing, but that's where I hold basically all of my investment cash. And so I've opened up a portfolio to all my patrons to really kind of show you that I'm not kidding around here. And what I'll say about this too is, if someone is giving you investment advice, what I ask is, typically, will you kind of show me the numbers? Will you show me kind of some of the moves that you've made, and really kind of, walk me through that? And if that person's not really willing to, go through that with me, I kind of raise a little bit of a red flag, and it makes that investment advice a little bit fishy, depending on if I trust that person, if it's a friend or something else. Of course, there's exceptions, but typically what I say is, if someone's not willing to really kind of share that level of detail, or if you don't trust that person as deeply, should you really be listening to them for investment advice? So I've tried to kind of de-risk that by really opening up my portfolio to anyone that becomes a patron, to really come up as transparently as possible. Hi, I'm Antoine, and I help people make more by investing. I went from $1,000 to $300,000 in 3 years by investing. I've opened up my full Robinhood transaction history for my patrons to see every single transaction I've made in my portfolio. I graduated from Stanford University, where I learned nothing about investments, investing, or personal finance skills. Turns out it's a massive problem in this country. According to a survey on public.com, the investment app, 54% of people report themselves as self-taught investors, and 70% of people don't know where to go or can't afford personal finance education or advisors. I want to change that. I want to take the knowledge from the top 1% and share it with you. Click the subscribe button to get videos every week on personal finance, or join me on patron.com, because the gains are on. So First part of the video, we're gonna go through those kind of moves I made in 2020. And in the second part of this video, we're gonna go through my predictions for 2021 and the two big things that I'm worried about right now for a potential market collapse. All right, so without further ado, let's actually go through my portfolio. And before I kind of open that up and show you guys kind of a pie chart that I pulled together for my returns in 2020 and whatnot, there's basically two key moments that I wanted to kind of point out for the reasons why I made these gains. It wasn't because of Dogcoin or GameStop or any sort of crazy, quick investment, what you might call YOLO or hype investments. So the first move I made was on February 24th, 2020. And so if you look at this graph right here, which is basically the S&P 500 index, which is kind of a proxy, right, these indexes for what the market is experiencing, because it's an aggregate of all these different companies, you'll see that right at February 24th is right before this massive slide in the stock market where it went down by quite a bit. Massive amounts of money were being lost in that short period of time. So I sold on February 24th, 2020. Again, you can call me lucky. I've been reading the news every single day for the past 5 years. And that morning, after I've been reading about COVID-19 for a little bit of time, I was definitely very worried about it. And what we were seeing in China, and how the virus was spreading, I thought could really impact global economy. So when I was the funny thing is, I actually was in Europe doing a consulting gig at Job Today, this company, which by the way, Luxembourg is this tiny little country that's just east of France, that no one really knows about in Europe. But I was lying in bed there early morning, reading the news, and I kid you not, I sold everything that I had in the stock market through my Robinhood account, which is again 99% of my holdings for my investments. And turns out I, through luck or skill, whatever you might call it, saved a bunch of downfall. If you then look at the next move again, which you can call me lucky again, was on March 20th, I bought big into the markets. I started buying significantly into what I would call the COVID lockdown category, because what I saw in throughout kind of that February time after I sold, and I was reading a ton more news now. I was subscribed probably like 6 different newsletters and spending a lot too much time in reading about this stuff and really trying to stay as educated as possible with all the real-time updates. And what I was trying to figure out is analyze, what's going to come up next? Like, what are we going to see next? Is this an apocalypse? Like, are we all going to, basically die and become zombies or whatever else? Or is this something that can be contained? And what I started seeing in China with the strict lockdowns they were implementing back in February, in Wuhan, China, where they completely locked down the city and started kind of doing all these radical, moves, is they were really able to curb the spread of the virus. We were seeing these curves flatten out. And, when I was observing that data and I made a decision on March 20th, when the curves were flattening in China, I was saying, okay, well, the curves in COVID cases are surging everywhere else in the world, right? It's crazy how much that those cases are going up and to the right, you might say. But in China, it was being contained and the curve was flattening, and these lockdowns seemed like they were working. So my theory was, okay, we're probably going to see some sort of fashion of lockdowns in between now and we get a vaccine for COVID. So for those reasons, I'm going to invest big into the COVID lockdown category. So you're talking about stocks like Peloton, you're talking about stocks like Chegg, the online learning platforms, things like Zoom, et cetera, and we can actually go through, and we'll go through that in the pie chart that's coming up, and you'll see some of the big gains I made from the companies I invested in for 2020. So let's go ahead and pull up the pie chart real quick so we can kind of take a look at these gains. So pulling it up on my computer right now. So as I pull this up, one of the things I wanted to make sure I highlight with you guys is this is realized gains. So what this means is basically stocks that I sold and don't own any more shares of, X company, on basically January 1st, 2021. There are other gains that I've made as part of my current portfolio that are, some that are very large. And for example, when I wrote this on January 1st, 2021, I was up $39,000 on Match, but you're not going to see that $39,000 as a percentage in this pie chart. It would effectively be, a third of my Peloton gains here, but it's not going to show up here because this is realized gains, and this is the way I'm kind of like displaying it as of now. Of course, these things change quickly, right? And for all I know, I could be making the wrong move and losing, a lot of these gains in the future. But this is kind of the current state of affairs as I'm recording this video on February 7th. These gains I'm showing you on the spreadsheet, though, are from January 1st, 2021, which is the last time I updated this. Look out and subscribe to this channel for more updates and more videos if you're interested in seeing kind of updates in my portfolio going forward. So if we look at this pie chart, you're gonna first notice this big, huge, red looking area, which is Peloton Interactive. So I invested big in Peloton in March, basically at that trough we were looking at in the stock market when it was basically at a really low price. And the reason I invested in Peloton was, with the COVID lockdowns and the work from home kind of movement that I was foreseeing, where I thought was going to happen, Peloton I thought was going to be, really going to benefit from this. People, that I knew were starting to buy Pelotons themselves. They're quite expensive bikes, but there's also this subscription app they had that I've, used, and actually as an investor, I like to really use the products that I invest in, so I can really understand the technology from a product standpoint, which is, by the way, my career, my full-time job is in product. So I really come from that angle of learning and understanding how is this product different, how can it be better, and I'm always thinking of different, crazy ideas and whatnot in, different types of products and things like that. So just want to give you guys a little bit of that context. But Peloton was a fantastic product from my perspective, and had a much cheaper subscription price, which I think is less than like $20 a month for their app subscription workouts. You can filter by different types of music you like, by different types of workouts and things like that. And I definitely used a lot of their workouts myself, and I really enjoyed those. And what you have seen over the past, since 2020 has occurred, and their recent earnings actually just came out of Peloton, and their active monthly subscriber growth has just been going through the roof, and their stock prices has gone crazy with it. So that's about 63% of my gains for 2020 was Peloton Interactive, which is just under 100K worth of gains that I had in the markets for 2020. And these are realized gains again, right? Match is a whole separate argument, and there's a bunch of other stocks I'm still sitting on for more gains that account for that full 245K number that I'm quoting you guys on. The gains that you're seeing here is just 156K of that 245. So other companies that I wanted to kind of highlight here are, one, if you look at this kind of orange area over here, that's $7,000 worth of gains in Chegg, which is an online learning platform. I actually used some of their forums and their problem set kind of Q&A sections back when I was in school, which was really helpful. And again, same thing with this kind of COVID lockdown category. I thought they were going to benefit from this situation, with schools likely having to move online, and those students needing some sort of resourcing and help with tutors, which Chegg also has, etc. So Chegg was another one I wanted to highlight here. Another big gain was Amazon. We saw a massive surge with Amazon stock, obviously because of shopping moving from physical stores to online stores, and Amazon definitely benefited. But the other big thing about Amazon that a lot of people don't know about is their biggest profit puppy. So their revenue is basically majority just comes from that e-commerce, and then there's kind of this much smaller percentage that comes from what we call AWS. And a lot of people don't know what AWS is. It's Amazon Web Services, and it's basically like what a lot of the internet runs on. I work in tech as a product manager, as I mentioned, and so a lot of these websites actually run on AWS. It's servers, it's cloud, infrastructure, all that stuff. And the engineering teams that I work with could go much more in depth and technical detail with what AWS actually does. To back up, is a smaller percentage, a much smaller percentage of the revenue that Amazon takes in every single given month. If you look at this chart that I'm going to pull up, much smaller percentage of the revenue. But if you look at it as a percentage of their profit, it is a massive part of Amazon's profit. E-commerce, the profit they make is much smaller, these e-commerce sales. So kind of really interesting. And again, my theory with Amazon is AWS is going to keep booming. Things are going online, things are going online more and more. So that's a play and bet I'm making. Another investment I'll highlight is Zoom here, where I made $6,000 on Zoom gains, about 4% of my overall gains, or whatnot. And Zoom, I don't have to go too much in detail here. You probably are very familiar with them, but online conferencing, they have one of the best products out there. I am a big Google Meets or Google Hangouts user, and I use video conferencing for my job every single day. So I was a little bit bearish on Zoom for some of those respects and kind of their defensibility. But one of the things I've been really keeping track of is if you look at the Google Trends for the word Zoom in the US for basically this time span, you can see they have a huge surge in Google Trends, so Google search volume that's looking for Zoom. And then it kind of drops back down, but it's still at basically 3x to 4x of what it was pre-COVID. So, kind of interesting to see that. And obviously Zoom stock has really benefited from those trends and that growth. But I can kind of go into why I'm actually still kind of bullish on Zoom long-term based on kind of some of these Google trends that I'm looking at myself. So that's a quick kind of a little overview of kind of some of the gains that I've had in the stock market, and how each of these kind of investments and categories fall into it. Let's switch over to the next segment of this video. Let's talk about, 2021. Let's talk about trends that I'm seeing, that I want to kind of discuss and have a conversation with investors about, which really worry me. So the first, trend, or should I say topic, that I'm really worried about is COVID mutations and the slow vaccine rollouts. So, to me, I ask questions like, what happens if too few people get the vaccine before the COVID mutates, and requires us to develop a new vaccine? What happens then? Well, my theories are that it could potentially really, obviously it could cause a lot of deaths, which would be really bad and all that. But specifically for investments in the stock market, I think this could really trigger another big market collapse like we saw when COVID and these kind of things were being announced in February. Sure, the government still has a bunch of stimulus, and they keep, their stimulus is going to hopefully pass again soon. But that being said, I'm very worried of the long-term impacts if we keep getting stuck in lockdowns in this COVID world. How long is too long? Like, will we break at some point? And these are all questions that I'm really worried about that could keep us, in a worrisome state, especially when we look at companies that have been absolutely slammed in the stock market because of COVID and are kind of hanging on by a thin thread. We're talking about like travel stocks, like airlines, you're talking about cruise lines, etc. I mean, some of these companies, if they can't last for years of COVID, right? Like they have a certain amount of liquidity and they keep raising more cash, or they keep getting more help from the government, depending on what companies they are and how big they are. But ultimately, they have a limited runway, and if COVID keeps getting extended and these travel stocks or these stocks that aren't as friendly with COVID lockdowns aren't able to stay cash liquid and have enough money to pay the bills at the end of the day, they may have to go bankrupt, and obviously that could trigger some big slams on the markets for those specific public companies. But it could also trigger a broader market collapse, I think. So that's the first thing that I'm really worried about. And then, I stay up to date really closely with some of these things. So subscribe to this channel if you want to kind of hear some updates about some of these topics. I can't promise that I'm going to post a video exactly at the right time, right? Because some of these things happen very quickly, and I sell and buy things in my own portfolio very quickly, and quicker than I can even come up with any sort of YouTube content. So for those, if you're worried and you want to kind of have someone on your, to follow their moves from what they're doing, you can consider becoming a Patreon on patreon.com/wellshare. Plans start as low as $4.99 per month. So the second trend that I'm going to talk about today that really worries me about the stock market, and again, I hope that these trends that I mentioned to you guys are helpful for you. If they are, would appreciate if you send a like on this video or dropped in a comment, with your thoughts or questions. It helps more people, learn about some of the content I'm creating. So would really appreciate those and whatnot. But the second trend that I'm worried about that I want to make sure I share with you guys is the unpaid rent time bomb. So I'm going to read to you guys a quote from the New York Times that I read this morning on February 7th of 2020, which by the way, 2021, which by the way is Super Bowl day right now. And I'm sitting here this afternoon right before recording this video, which is fun, but it just kind of speaks to how crazy and passionate about the stock market and investing I really am. But quote from New York Times, a study by the Federal Reserve Bank of Philadelphia showed that tenants who lost jobs during COVID-19 crisis had amassed $11 billion in rental arrears. A broader measure estimated that as of January, renters owed $53 billion in missed rent, utility payments, and late fees. End quote. Wow. Did you just hear those numbers? $53 billion in missed rents. So right now we have moratoriums in a lot of places in this country, in the United States, that are effectively preventing people from getting kicked out, right, by their landlords, which is fantastic. I'm thankful for government for putting those in place. But also those moratoriums don't say anything, at least currently, about, for example, the one big that's in California, it doesn't say anything about, post-moratorium, like what's going to happen. Are people going to have to pay rent? And so far, the government has basically said, yes, renters are going to have to pay rent to landlords. And if we think about, what that means, on one end, it's, I think, going to potentially really put people in tough spots because they're gonna have to pull potentially money out of their savings or even the stock market to pay some of that due rent at that time. And two, if they can't pay that rent because they don't have any money to pull from investments or they don't have money to pull from savings and they go bankrupt or they declare bankruptcy, then the landlord is still liable to pay their mortgage potentially. And so how does this impact the landlords, right? In that respect, do the landlords now, also have to go bankrupt because they can't pay their mortgage anymore because of all the due rent, that rent that was due is no longer there. So I think it could really create a pretty chaotic situation overall, one that's really not ideal for people's lives, but also not ideal for, things in the stock market and could trigger a broader collapse. So the questions I'm asking are things like how many people invest in the markets will need to pull cash out when the unpaid rent is due. That's an open question that I have. Drop in maybe some answers in the comments if you guys have any answers there. What percentage of the overall capital invested in the markets will be taken out to pay unpaid rent by either landlord or renter? Again, that could trigger, I think, potential market collapse. Even if it's small, like 5% of the overall money that's invested in the markets, these things can have a pretty powerful impact on how the stock market behaves and whatnot. So again, some of those, those are two trends that I want to kind of make sure to mention to you guys in this video. If this was helpful, please give this video a like, drop in a comment with any questions, subscribe to the channel for more videos in the future like this one. I'll be talking a lot about investing this year on YouTube and through public.com and through the Discord group that I'll all link down in the comments. So feel free to join any of those kind of chat communities that I've created. There's been a lot of great discussion lately about, all sorts of different topics, including some topics that some people are not as excited about, like Dogecoin, but if that's your cup of tea, that's also being discussed. I hope you enjoyed this video. There will be more coming. Thank you for your time, and we'll see you in the next one.